It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, October 13th, 2016. Boy, we got some great trading opportunities setting up for tomorrow. Crude oil is bullish and trying to finish rotation back to the high of a spike and channel. E-mini S&P is also bullish, but fading off the highs of today's range. Gold is range-bound with a slight bullish bias, and the euro is bullish and trading at the high of a spike and channel this evening. We got some major news on the schedule for tonight and tomorrow, and a solid plan of attack no matter what Friday throws our way. I got a great newsletter for you guys and gals tonight. Plenty of reliable opportunities here and a great plan setting up. Before we jump into our charts, though, and put the plan together, you know how we roll. I always want to remind you guys, the only place to watch the full-length version of this video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at Sideways Markets and watch the full-length version with me here this evening. While you're here, don't forget, join the mailing list. Upper left-hand corner, I'll send you an email every evening when our nightly newsletter goes live. Download today's charts. You can download all the charts below the video that you see me using in tonight's video. In the upper right-hand corner, please don't forget, if you're not a student here at School of Trade and you'd like to grab a free pass, grab that free pass to attend the trade room in the upper right-hand corner. And as always, as I always remind you, if you're brand new here to School of Trade, check out the frequently asked questions page on our website on the right-hand side to give you the who, what, where, and why we are considered the industry leader in trading education. Don't forget, guys, tomorrow is a Friday. Fridays always mean early in, early out. Tomorrow's, of course, a Friday, October the 14th. So tomorrow, Friday morning, we're going to get in early, get out early. Anything after 11 a.m. on Friday will be lower volume, lower liquidity, and, of course, lower reliability. So keep your eye on the time tomorrow. We got some news coming out here tonight, though. We've got news from China coming out here tonight at 9:30 p.m. Eastern Time. If you're trading the Asian session or early parts of London tomorrow, you're going to definitely want to be aware of that tonight, 9:30 for the CPI. All eyes and ears on China overnight. And then tomorrow we're going to Friday, October the 14th. We've got not a lot here until we get into 5 o'clock. We got the Italian CPI. We got some PPI and some retail sales at 8:30. Business inventories and consumer prices or consumer sentiment at 10 o'clock. And then we got Yellen speaking tomorrow at 12:30 p.m. Eastern Time. If there wasn't enough reason tomorrow to get out of the office early and enjoy this amazing weather, I'm sure a lot of places in this world right now, the leaves are changing, the weather's getting a little bit nippy out there, so enjoy your time tomorrow afternoon. Definitely want to be avoiding when Yellen is speaking. So early in, early out tomorrow. Again, we got I doubt we're going to get much of a mover there from the 5 a.m. news. You know, we're all kind of listening in here to see how the Brexit stuff develops here. We'll see. It's so up in the air right now. We'll see right now. But again, tomorrow though, you get 8:30 and 10 o'clock. I really liked having news at 8:30 and 10 because it gives us a good kickstart to the beginning of the U.S. session. And, of course, going into that 11 o'clock hour, hopefully that 10 o'clock news will continue that volume of volatility and opportunity tomorrow for us on Friday, October the 14th. Don't forget, we're going to be in our trade room tomorrow morning, 8 a.m. Eastern Time. Come out and join me. We'll see you guys there as advanced members. Let's jump right in here tonight. We got crude, S&P, gold, and, of course, the euro here this evening as we wrap up a fantastic short second week of the month. Crude is bullish and trying to finish rotation back to the high of a spike and channel this evening. The bulls have control and are trying to hold above the double up for a move up to retest yesterday's highs. The most reliable way to trade a spike and channel is to look for traps and failures on a pullback back to the correction zone. Or if this does just spike higher, buyers will need to wait for a short-term range to develop at the highs and then wait to buy the lows of that range. Sellers, on the other hand, oh boy, sellers. You got a big challenge right now because there are plenty of buying opportunities waiting as this price pulls back. And with the buyers in firm control right now after that spike and then rotation off today's news report, sellers should be focused on getting and holding below that support trend line coming off today's lows for a move back to retest a low at 49.36. Here's a very good example of a lot of times what happens when we see news comes out. You know, today we had the 11 o'clock inventory report, right? Price takes off to the downside and immediately rotates right back up. A very strong bull move coming back up. What probably happened was traders faded the low of this, and it just kind of kept on going here. And of course, anytime we see a strong move in one direction, you know they're going to want to buy that next pullback, right, and try to get that measured move here. The measured move is a little bit unrealistic right now. You know, this thing is up around the 100 area here. If you look at that measured move, it's a little bit more realistic here to be thinking prior high, triple up, top of that channel, and then we'll look for a little bit larger measured move, a little bit wider measured move sometime tomorrow morning. So keep that in mind right now. What I'm seeing right now ultimately is a spiking channel. The spiking channel really is, at least from what I can see right now, and that's pretty much the only thing we have in this chart besides just a wild beast after that news came out at 11 o'clock this morning, a spiking channel. Spiking channels basically tell me the ideal trade here for the buyers is going to be a move back down into that correction zone, seller failure, and then back up. You want to be thinking in terms of something around these, right? Something around these lines if you're going to be a buyer, right? Seller failure, breakout, pullback, and then back up. So buying on that seller failure, buying on the pullback. And that's really attractive for the buyers because it gives them a whole lot of meat on the bone as it comes back up to retest the high. You have to think right now, the prior day's high, yesterday's high, right, Wednesday's high, the high of that channel, and that triple up coming off today's news, those are all going to be big milestones for those buyers. Now, if we don't get this deep pull back, we're talking about pulling back into the correction zone, trapping down at 50, into the battle zone. These are all areas here. The battle zone, the 50 area, the correction zone. That's why I said earlier it's going to be really difficult unless the sellers can get in now. Unless they're selling real quickly here, you're going to be running right into the correction zone, right into the big round number, right into the battle zone. And so obviously your buyers would love to get in on one of these dips here, right, for the move going back higher here. And of course, you can see here now, as the market opens up, right, we push back up to that prior high. So this now helps me out here as this market opens up, right, on the electronic session here at 6 p.m. Eastern time. Now, the first candle here, as this thing opens, I know I'm recording this right about 6 p.m. Eastern time right now. As this thing pushes higher here, now we've already completed the short-term rotation. Same plan, right? Buy those dips. Those are going to be, right? Those are going to be where the most reliable trades come. However, now we've got the top of this range here. So this is where you want to be thinking possible trading range tomorrow. It's a Friday. It's been a pretty active week. OPEC's been stirring the pot all week here. Started up on Monday with Russia, and it's been going on all week this week. So keep an eye out here. Again, if we don't get this deep pullback, right? Look for that move back, right? Trap low, right? Some of these little lows back here, right? Trap low, back up, and then watch out for a trading range to form here. And you know the old saying, right? Unless we can get a real strong breakthrough and hold above that high, right? We saw a great example of it today in the trade room, right, where we saw they weren't interested in busting high. So what do? You keep looking to buy that low, right? So think about this right over here. This is the type of situation you want to be thinking is possible for tomorrow, right? Strong move up. We may not see continuation. We may see continuation, but if it continues, it's going to have to really push strong, hold above that high, really give us a lot of proof above the high of that spiking channel, right, that they want to send this up to that triple up higher. It's possible. It's not probable based on the look of this candle right now, but we'll have to wait and see what happens. So we know we're seeing it go up here. Again, it's a bull market, so I'm definitely not interested in selling. And as this price pulls back, you're likely going to see more buyers enter the market. And so keep an eye out, right, for that possible trading range, very similar to what we saw today. We're, of course, looking to clip off those lows and run back up to the highs. Just be careful buying high unless you see that real strong breakout pullback. We can get that move back up to those highs. We talked about this yesterday evening on the newsletter about what constitutes a strong breakout pullback of a trading range. So make sure you go back to last night's newsletter. It's on my YouTube channel. It's also, of course, right below this video on the blog as well. What about a seller right now? Ultimately, if you're a seller, you want to be thinking right here. and right here. That's pretty much all you got. If you're a seller right now, you're thinking, okay, I got to get below, breakout pullback, and then go. That's going to pretty much be the best opportunity here for those sellers on the way down. I don't want to mess with this area here, though, if I'm a seller, just because you can see it's a correction zone, it's the battle zone. You can mess around with it if you want, but then the next area here is going to be that breakdown, pullback, and use, right, if you can use that trend line here, and all that trend line really is just piggybacking right off of what we know right now. Remember, traders are human beings, and human beings are going to use whatever we can, right, to find some areas of support and resistance. So again, sellers here, be careful. The only other option to be a seller will be trying to mess with a double overshoot here and try to sell off that high, but I never really like to mess with. I never like to sell a bull market. You know, you got to wait for that bull market to turn back into a bear market. So we got to see some strength to the downside, right? And of course, they got to hold a pullback for this to become a reliable opportunity here for those bears, right? So as this price goes up, break out, pull back, hold above that high. If it does go into that trading range, right? Watch out buying the high of that range, buy them dips. And again, be patient if it does pull back here, because that's going to be another option for those buyers here tomorrow. I'd be lying to you if I said the possibility wasn't for this price to get stuck in the mud going into the weekend around 50. So just kind of watch that also as well. We're looking for that move back down, seller failure, breakout, pullback, which when we thinking about it, if this thing comes all the way back down here, you want to be thinking something like this, right? If it comes all the way back down, sellers will grab it. Back down, seller failure, breakout, pullback. That's going to be the one you really want to look for. That's the most reliable trade as it comes right back up. All right, if it makes this full pullback, then we know the bears will take short-term control. So that seller failure is going to be that 40-60 trade. The breakout pullback will be the 60-40 trade. Be aware of that tomorrow. All right, and we'll of course we'll be seeing this tomorrow morning in our trade room in real time. All right, let's see here. E-mini S&P is bullish, but fading off the highs of today's range, which tells us that buyers aren't interested yet, right, in buying the breakout. So we will be looking for a deep pullback to the battle zone for a retest of the highs, or a successful breakout pullback above the range highs tomorrow. The sellers have a small window to scalp back to the battle zone, but they need to beware trying to sell into the range lows until they see a successful breakout pullback below that 21.15 for a move down to today's low at 21.07 3/4 tomorrow. Now, here's a really good example of what I would call a multi-directional trending day, right? A multi-directional trending day. It's a big wide range, right? It's a big wide range. And what really gives it away is the fact that, yeah, they made a new high, but does that look convincing to you? What would look convincing to me? If you watch my newsletter, you already know. It'd have to go through, get that moving average up, hold the pullback. I knew you've been paying attention the past few weeks with me here every evening. I'm glad to have you back tonight. So I'm not going to take speak, Joseph. It's called English here, Joe. Slow it down, brain, slow down. Let your mouth catch up here. It's clearly bullish, right? Let's be honest here. We're clearly bullish right now. But the location, if I can poke some fun at myself there for a bit, right? But the location of that move is just so convenient there, right, back up at that high. So I'm suspicious, right? I'm definitely suspicious. Again, I would call this a multi-directional trending environment, which is really just a big wide range, right? Sellers had control on the way down. They lost it, right? Jump up. Buyers then take control, and we run back up. Now, if this range does what ranges do, what will happen is they'll hold the pullback here, and they'll rotate back down again. Then, of course, buyers will hold, and they'll rotate right back up again. So this is that multi-directional range. You know, think about it this way. There are really narrow ranges, right, where you want to buy low, sell high, buy low, sell high, buy low, sell high. We talked about this last night, right? Then, of course, you've got these much larger ranges. You know, and again, you really could have, you know, kind of a bear trend going down, right? Bear trend going down, then of course that bull trend going back up, right? So obviously we'd like to buy the low and sell the high here, but it's such a wide range that you're going to have that ebb and flow going in both directions, right? So that's kind of the idea behind that multi-directional trending day. And what a great example of how the buyers get a real strong move. They hold that pullback, and right when they make that new high there, that's when you know, bam, onto a bull market at this point now, and you know they're gunning for that high of day. They got their target at the high of day, and look what happens. Did they continue buying through the high? Doesn't look like it.